Well, good morning, ladies and gentlemen, and thank you, John, for that very kind introduction. First of all, congratulations to Semex, 25 years, that's quite an achievement. I know my twin brother hasn't missed too many of those conferences over those 25 years, but it's the first time for me, but delighted to be here. And as John has said, David and I started very early this morning. We cozied up in a BBC radio car outside, and again, we were driving the messages around volatility and the concerns and the challenges that we face as a dairy industry. Obviously, it's a privilege and an honour to have been elected as the President of the National Farmers Union of England and Wales last February. Little did I believe at that time that we were going to see the volatility that we have seen across the industry. But again, it's an honour to represent over 47,000 farm businesses. And when you start looking at 47,000 farm businesses, then we can go to government and say how we represent probably 250,000 people within those farming families. And within that 47,000, we represent nearly 7,000 milk producers. So as John has said, I was going to talk about some of the challenges and the volatility that we are seeing and how important it is that society backs British farming. But before I move into some of these important issues, I want to just talk about some of the events of last week. And on my way up to Glasgow yesterday, I stopped off with a passionate first milk producer in Leominster. He's been with the first milk since conception many, many years ago. He milks 300 odd cows. And like 1,100 other producers, obviously to be told last week that they were going to have to wait 2 weeks before they have the milk check, again highlights the difficulties that the whole sector faces, from farming right through the processing sector. And again, it's very, very difficult for these farmers when they know that they have bills to pay, where there's direct debits this week and so forth. But like all of us, he believes that the most important thing for First Milk now, it's paramount that its sort of financial health is secured going forward. And these are the challenges for all the members within First Milk. And I want to take this opportunity to thank Sir Jim Pace and Richard Davies on the board for meeting myself and our dairy team only last Thursday morning, the day after the news broke. But my message would be to Sir Jim and to the board of First Milk, you have to now get out and explain to your farmer members the consequences of that decision, and let us hope that it can put First Milk on a much better secure footing going forward. When I started writing some notes for today, and I'm not here to kick First Milk, I can assure you that, but it to me highlights it's one of the symptoms that we face in these troubled times in dairy farming. And it doesn't just do justice to say that we've had 6 difficult months. You only need to analyze what is happening out there on the farm, where some farmers are facing their lowest milk price in 8 years at 20 pence per litre. I would suggest that is totally uneconomic, that is not sustainable economically going forward. Yet, farm costs are now 36% higher than they were 8 years ago. Indeed, if you were to analyze feed costs, which is probably the single largest cost on a dairy farm, then animal feed has increased by over 50% since 2007. And that does leave a lot of dairy farmers extremely concerned about their future, the future of their farm businesses and their families. Dairy farmers in general are under extreme financial pressure. As John said earlier, we milk over 600 dairy cows, aim to produce nearly 4 million litres. When I analyse over the last few months, what 7 pence per litre reduction equates to 4 million litres is in excess of £250,000. With another price cut due in February, then the reduction in that income is close to £300,000. Now, if our dairy business had made £300,000 last year, then we might be able to take a deep sigh and try and ride out this storm. But those are the sort of figures that lots and lots of dairy farmers, the people I represent, are facing at the present time. And as a family farming business, with my eldest son and my nephew very much in charge of managing our farm on a day-to-day basis, we took the decision many years ago that dairy farming was going to be one of the mainstays of our business going forward. And over the last 5 years, we have invested quite heavily within our 2 dairy units. So again, it is so important to me personally that we create some profitability so we can look forward with some greater degree of optimism for the future. We only need to look at the number of dairy businesses that have left the sector over the last number of years. 60 dairy farmers left the industry alone in December. And for the first time ever, we have now dipped below 10,000 dairy farmers in England and Wales. It is a number that has halved since 2002. Let me repeat that. The number of dairy farmers in England and Wales has halved in the last 12 years. And obviously the big worry for those of us who left, how many of us will hold on over the next 12 months? And we certainly need to be prepared as business people for some difficult months ahead. Good news is quite hard to come by at the present time. I think the closest we've come to in the last couple of weeks is obviously the stand-on with Muller Weisman on their milk price in February. And globally, as Michael said earlier, global markets have a big part to play in milk pricing, but at least we have seen an increase in the Fonterra global auction in December. Let us hope that this is the beginning of an improved trend. I was also heartened at Oxford last week, at the Oxford Farming Conference, to hear Tesco reinforce their intention to continue with their cost-plus formula for their liquid farmers. For the National Farmers Union, it is important that we focused most on the issues that we can make a difference. It is extremely difficult for us to get involved in milk price fixing. But I believe there are areas where we can definitely make and improve the situation. Let's look back to first milk. Following that announcement last week, we have spoken to the RPA, we've spoken to the tax collection agencies within government, and we've spoken to all the high street banks. It's been so important that we've highlighted the situation as far as cash flow is concerned for our members over the next few months. And yet, there is so much required of us as an organisation. Just take the CAP review over the last 3 to 4 years. It's an area that has taken up an awful lot of time, and we have had some successes. We've eased some of the worst aspects of the greening measures, and the threat of 15% modulation in England was reduced to 12 through some hard lobbying of the Secretary of State at that time. But looking ahead, we now have to hold DEFRA and the Welsh Office to account that farmers can register and apply for the new CAP by May, because I am certain it's going to be so important that that basic payment lands in farmers' bank accounts next December. And also, we have been in discussions with the new Agricultural Commissioner, Phil Hogan, who I believe is a breath of fresh air compared to his predecessor. But again, the review of the greening measures and the effect that the greening measures within the CAP is having, particularly on dairy farms. Another area that we keep banging on to government about is regulation. And all I will say to government and its agencies is this, that if these are going to be the milk prices that we receive over the next couple of months and years, then it is important that government reduce the cost and the level of regulation that we face as a dairy industry. And we must not forget bovine TB. When you look around the country and see the effect that herds, dairy farmers, those under restriction, the effect it's having not just on the costs to their business, but also to the human misery that it causes to farmers with the amount of testing that's taking place. And it is so important that the two pilot culls in Somerset and Gloucester, in my opinion, they've worked with all the intimidation and the threats that were made to the people on the ground. And I admire the people who were involved in those two culls. But I can assure you that we are starting to see some real results in Somerset. And obviously with the general election just around the corner, then it is important that wildlife control is very much part of that TB strategy going forward. But let us come on to the volatility that we are facing within the dairy industry. And I have to be clear, I do not believe that volatility in the milk sector, like any other sector in farming, that volatility is not going to go away, and we as farmers are going to have to adapt. At the start of 2014, we saw beef prices fall from £4 a kilogram dead weight down to nearly £3. Thank goodness the value of beef has increased back to 360, 370 pence per kilogram. So that was the volatility within the beef sector. In feed wheat, we saw values drop from £150 a tonne pre-last harvest down to £98 per tonne off the combine. And they seem to have bounced back to 130, 135. So again, it is not just the milk sector that is having this roller coaster ride of volatility. But the roller coaster ride, that is the milk price, underlines to me the need for better tools to try and manage some of that volatility. Contracts are one of those tools. And again, this is an extremely important part of our work at the NFU, particularly the NFU Dairy Board. I believe we have succeeded in making a difference through the voluntary code, through increasing transparency. There are new and innovative contracts options which could provide solutions. We also need to look at new pricing mechanisms that share risk fairly. And we are at the moment looking at these contracts to see if we can improve on what we have to mitigate some of that risk back to dairy producers. Contracts where milk prices are set through formulas are set for a longer period, or set for a longer period are already available. Some of these are well established in the liquid milk market, but as yet they cover only a small proportion of dairy farmers. We know that our milk buyers are looking already at different contract options. I know David and Farmers for Action refer to an A and B contract. But what we do need is fairer contracts. Contracts that better share that risk between the farmer and the milk buyer. Some of the recent A and B contracts I've seen put all the risk and cost of balancing back onto farmers. I do not believe that this is right, and if it is forced onto farmers, there needs to be the right price premium for the A quota, then at least that B quota pill will be easier to swallow. There is another contractual problem out there, which we are well aware of. A number of our dairy farmers are on notice for this spring. I am extremely concerned what may happen to these farmers when it comes April. And again, we are continually speaking to all the milk buyers to raise this issue because, again, this is a moving feast. Government also has a role to play when it comes to volatility. Not in managing the market, but in terms of tools to manage that financial risk. When you look at taxation, we'd like to see the UK government offering longer periods of profit averaging, just like has been announced in Ireland recently. We may need to look at tools, financing tools that support risk management. Farmers in other countries, our competitors, use these tools. Australian farmers have access to a farm deposit scheme, and our New Zealand colleagues have an income equalisation scheme. And at the moment, our dairy board and our professional team are very much working with DEFRA to see if it is possible to implement a futures market for dairy products. The need for dairy to be more on DEFRA's focused is also true when it comes to investment. I don't need to say to any farmers in this room that dairy farming needs continual investment. I would like to see government consider and introduce an infrastructure investment allowance. There are lots of tired farms within England and Wales that need new investment. Most G20 countries support business capital infrastructure investment by providing some form of tax allowance. The lack of these tax allowances in the UK is creating a barrier to that investment for many, many farm businesses. An infrastructure allowance delivering relief over the long term would send out the right investment signals to businesses. And it would say loud and clear that the government wants business to grow and to invest, to become more efficient and to become more competitive. And how often do I hear DEFRA say, we wish to grow the rural economy? This would be one way where you could employ builders, contractors, and get that investment going on our farms to make us world-beating. Whoever the next government will be, it must retain an appropriate and consistent level for the annual investment machinery allowance. Agriculture, dairy farming, is a capital-hungry sector, and I want these businesses to plan for the longer investment cycle. I'm delighted to see processing capacity, the investment that's taken place in processing capacity here in the UK over the last couple of years. We only need to look at the investment that's been made by Arla in its Aylesbury plant, Muller Wiseman's new butter plant, and their focus on value-added products, and other processors that have invested over the last number of years. But if we are going to make further gains into our self-sufficiency, because we are not self-sufficient in milk and milk products, then we do need desperately that further investment. We still import into the UK 100,000 tonnes of cheddar cheese annually, 350,000 tonnes of soft cheese, and 100,000 tonnes of butter. And the percentages is even worse when we look at yogurts and some of the chilled desserts, where over 50% of what is on our retail shelves come from overseas. So when you look at these numbers, then it indicates to me that there is scope when it comes to import substitution. And in the right circumstances, I am convinced that we can compete with our other competitors within the European Union. And again, that point was underlined by Anderson's at the Oxford Farming Conference last week. And what we do have the support of the British public. In all the surveys that the National Farmers Union has carried out in the last couple of years, I can assure you that the majority, 79% of the British public, want to back British farming and British produce. They want their fresh milk daily. It frustrates me that I sometimes struggle to find British butter on retail shelves. And I rarely see the red tractor mark on cheese. We are busy lobbying at a European level for country of origin labelling on milk products. It's worked exceptionally well in the red meat sector, and it's worked in the white meat sector. And we would like to see that transferred across into milk products. And I have to say that we have the Secretary of State at DEFRA on our side. I don't need to say to any of you how the new year has triggered a further round of price cuts and promotions with our food retailers and discounters. And there is no doubt there's going to be some fierce competition in 2015. We as farmers don't set retail prices. But we fear the knock-on impact and downward pressure that this is having on margins right down through that supply chain. And I say to the major retailers, trying to match the discounters on price is not sustainable in the long term, because your business model is totally different to that of the discounters. I am delighted, and I do believe that our major retailers can do more to back dairy farmers. They should provide sufficient shelf space for dairy products, and I would like to see them promoting the red tractor more. And this should also be part of the procurement policy of government and its agencies. And my challenge today to all retailers, discounts, the food service sector, is to back British dairy products. We cannot blame our customers for not buying British if that product is not there in display in the first place. So the message is clear to retailers. Stand up and be counted. Do your bit for British dairy farming so that you can give the public what they want. the quality British dairy products that they value and trust. Back British to ensure a sustainable and positive future for our dairy supply chain. And for those that will point to support they already are offering, by all means shout about your credentials on liquid milk. But let's see this replicated in other dairy products. British dairy farming is seen as iconic in the eyes of the British public. And I urge retailers to guarantee the future success of this great sector of British farming. Through all of this, I cannot stress enough that we need to work collaboratively together. Most of us, representing British dairy farmers, signed up to the aims and the aspirations of leading the way. Those messages still hold true and are probably more vital now than ever before. I do recognize and respect that there are many different ideas and views on how to tackle the current situation. That's fine, but it's also important that all of us representing dairy farmers focus our attention and energies on finding the right solutions. Milk and dairy farming are too important to the nation to allow the industry to be dealt blow after blow. We all know in this room that we can compete, and we know that we could have that great opportunity in the longer run. We all have our strengths in different fields. Using those strengths collectively for the benefit of our dairy farmers is something that we can all strive to do. Let's ensure we do that from now on. Let's make certain there is trust and commitment right across that dairy supply chain, taking and creating every opportunity we can to back British dairy farmers and give our dairy farmers and their families some hope and confidence for the future. Thank you very much for listening.